Hey everyone, in this video, I'm going to compare Nikola stock with Fisker stock and answer which one I think is a better stock to buy. To make this decision, I'm going to compare these two on revenue, on valuation, on cash flow, on profitability, on shareholder dilution, and then I'll come up with the conclusion on which one I think is the better stock to buy. So let's jump right in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Starting with a comparison on revenue, we can see Fisker, after its first quarter in operation, eclipsed Nikola with 73 million in revenue, while Nikola's revenue fell to 31.31 million. Going forward, I would say Fisker's revenue prospects are better than Nikola's revenue prospects for a number of reasons. First, because it's operating in the consumer segment, whereas Nikola is operating in the business segment selling to truckers, and the opportunity is larger for Fisker. And then secondly, Fisker is operating under the outsourcing business model, which makes it easier for Fisker to increase production and increase sales because it doesn't have to invest the millions and hundreds of millions, if not billions of dollars in manufacturing facilities, whereas Nikola had to do that, and so it's having a harder time with the manufacturing part of the business and keeping costs down. So for those reasons, just speaking about revenue, Fisker's revenue prospects look better than Nikola. The next thing I wanted to compare these two on is net income. I understand both of these companies are losing money on the bottom line, but what I like to see with growth companies with massive opportunities is making progress towards profitability. You don't have to be profitable on the bottom line, but I want to see progress. And with Fisker, we did see a little progress in its latest quarter. You can see the net income for Fisker was falling, of course, before they produced anything. But now that they started production and they made some sales, net income fell in the trailing 12 months to 468 million. Meanwhile, Nikola's net income continues falling and falling faster than ever, losing 1 billion in trailing 12-month net income. Now, Nikola as well made some adjustments to the business to reduce these losses on the bottom line. They cut some costs, they divested away from some international business, and they said they're not going to produce the battery electric vehicle, the battery electric truck anymore, because they have some in inventory, and they're going to change their business model to make to order, meaning they're not going to make any trucks unless they've been ordered already. And so they don't run the risk of having these trucks in inventory and then having to offer discounts to sell the trucks. So these changes have improved Nikola's operations, and I'm looking forward to seeing this in the profitability going forward. The next thing I wanted to look at is average diluted shares outstanding. The number of shares outstanding is an important financial metric. If a company issues more stock because it is running out of money or it wants to invest in a new growth project, it has the potential to decrease your earnings per share. Look up here, when I have a net income of 1,000 and shares outstanding of 100, my earnings per share is 10. You take the net income divided by shares outstanding and you get 10. But now let's say you increase your shares outstanding to 200 and you have the same net income of 1,000. Now your earnings per share is just 5. The same is true in the opposite direction. If a company is losing money on the bottom line and it issues more shares, it spreads out the losses across more shares, thereby reducing the loss per share, which is a tricky way to reduce the loss per share. Look at this point here. A net loss of 1,000 with 100 shares outstanding creates a loss per share of 10. But if you take that same net loss of 1,000 and you spread it across more shares, 200 shares, you now have a net loss per share of just 5. So it's a tricky accounting trick to get your losses reduced on earnings per share. So you want to take a closer look to see where the improvement in the loss per share is coming from. With that being said, let's look at the actual numbers, and you can see here that Nikola has diluted shareholders significantly, growing from less than 400 million shares outstanding all the way up to 857 million shares outstanding. They recently gained approval to increase the number of shares outstanding all the way up to 1.6 billion. I would not be surprised if they reach that 1.6 billion relatively soon. They need the cash, and so they can sell the stock to raise the cash. They're probably going to do that. And it's going to be a similar story with Fisker, although they have not diluted shareholders nearly to the degree of Nikola. But I wouldn't be surprised if they too start diluting shareholders even more as these losses on the bottom line pile up. I also wanted to compare these two on cash flow from operations because sometimes you have companies that will be losing a lot of money on the bottom line, but then they'll have positive cash flow from operations. And that's because of an accounting trick where, well, I shouldn't say trick, but an accounting reason where some costs are non-cash expenses. And so that could create a difference between the two. That's not the case here. But the interesting thing is that when we look at cash flow from operations, Nikola is actually demonstrating better progress than Fisker. Fisker, its cash flow from operations worsened in the most recent quarter as it ramped up production, as it spent money on inventory. It went to negative 305 million in cash flow from operations in the recent quarter, while Nikola is demonstrating progress on this front, and you can start to see the changes in the business model showing effect here for Nikola. The inventory change, right? That's a big change because now instead of spending money on the inventory, Nikola is selling existing inventory, and every time it sells a truck, that's inventory going out and cash coming in, and that's improving its cash flow from operations. 91 million negative in the most recent quarter compared to negative 305 million for Fisker in the most recent quarter. Moving on to long-term debt, with all these losses and all these cash outflows from operations, I wanted to see if, in addition to raising equity from shareholders by diluting shareholders, if these companies have been borrowing money, and Fisker has been. And we can see why Fisker was diluting shareholders less than Nikola. It's because Fisker has borrowed more money than Nikola. So instead of selling shares and diluting shareholders, Fisker borrowed money. And so they have $1.1 billion in debt, whereas Nikola only has $158 million in debt. So an advantage to Nikola here in this metric. So I wanted to see how much cash they actually have left right now, and this figure is probably much different now in between quarters, right? This is the latest quarterly update, but in between quarters they've made moves, and so this is likely different. Still, this gives us an idea of where they were at the end of their most recent investor quarterly update. Fisker had 527 million in cash, while Nikola had 362 million in cash. And each of these two have announced varying degrees of stock sales and debt raise, convertible debt, and so on. And I'm not surprised if the cash figure will be different the next time they report their quarterly earnings update. Finally, I wanted to compare these two on valuation. And I chose to use the forward price to sales ratio because they're both losing money on the bottom line and they're both cash flow negative. So the price to sales ratio forward gives me one of the next best choices if I can't use the price to earnings and the price to free cash flow. Given this metric, Nikola is more than 10 times as expensive as Fisker. Nikola is trading at a forward price to sales of 2.969, while Fisker is trading at a forward price to sales of 0.249. Now, while Nikola was better than Fisker in a couple of metrics, there was no clear distinct leader here, and Nikola didn't demonstrate to me that it was 10 times better than Fisker, right? So for those reasons, if I had to pick one of these two, now remember, I would not want to invest in either of these two, unfortunately. These two stocks are too speculative for my investing taste, but I can understand if investors are attracted to the high risk, high reward potential of these two stocks. For me, I wouldn't buy either of these two stocks, but if I had to pick one of these two stocks to buy today, I would pick Fisker because I don't think that Nikola is more than 10 times better than Fisker. And so because of the valuation, I would pick Fisker over Nikola. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.